All right, I think we're live. Welcome back to another video. My name is Justin, and today we're going to talk about how high Bitcoin can go. They're both making a dramatic move overnight. As of right now, Bitcoin is up by about 9%. Ethereum is not far behind it, and we want to try to understand what is driving the move. As far as I can tell, the news is that Joe Biden has been talking about an executive order for the digital dollar and managing assets for quite some time. We're finally seeing that he's actually going to do it with a scheduled meeting from the White House. So there's also with the things happening in Europe, some of the Russian people are trying to get their money out of the country. So that has accelerated Joe Biden's approach to managing these digital assets. And when things are in high demand, they tend to go a lot higher. It's also really important to note that when Jerome Powell gave us testimony not that long ago, he said that the digital dollar could live alongside these existing coins. So the question for us is going to be, how high can they go, and should they be going higher? So first thing I just want to point out here is that there's going to be two lines that are drawn here. The first one you can see is going to be the pink one, which goes all the way back to here. And by here, I'm talking about roughly 42,000. 42,000 is the high that we put in roughly December of 2020. And then we went up to our new all-time high, came back down, and then danced. But this right here is like basically a big giant box where we've just been kind of landlocked. This is a huge range just because from peak to trough, we went down by over 50. Off the lows, we're currently up by about 26%. So a good rule of thumb is when an asset is down between 35 and 66%, if the bounce is real, it cannot just take out the relative low, which it is trying to do right now. It has to make a fresh high. So we've taken out the low, which we can see here going back to November. Again, that's when we had that power dump overnight. I don't know if you guys were watching that. That was a dramatic move that happened until late November. And again, we're forming a W inside of here. And the question is going to be, can we actually break out? Confirmation for me would come in by, again, reclaiming last week's high. Last week's high right now can be found at 45,426. So call it roughly 46,000. That would also breach these previous lows and get us much closer to that 50 weekly moving average, or the blue line we can see over here, which is drawn at roughly 46,600. So again, it's up by, it's even moving as I'm recording here. So it's claimed that 42,000. The move up here is like there is some juice behind it. I would want to see some volume. And otherwise, again, 42,000, 42,500, nice big round number. 45,000, nice big round number. And then the 50 weekly. And then we got the the final boss up here at roughly 49,200 and 50K to confirm. For me, that would complete a short-term W to get us up here to test roughly those highs. If we can breach these highs, back test, and advance, we're probably going back to all-time highs. Again, how long could this take? Well, again, I'm usually early. I'm usually early on calling the move, and I don't know. Frankly, this move right now is pretty strong. When we look at a shorter-term time frame like the daily, it is very early in the session. However, the volume is almost on par with the 50 weekly moving average, which is very strong. I also want to point out that here on Bitcoin, we can note that we have some Fibonacci retracement levels. So again, inside of here, this white line is going to use the all-time high back down to the bottom. Sorry, the 2021 high down to its relative low. We got an uptrend here, which forms a pennant or a blue triangle. Just note that this right here is only updated once per day, which is why we're seeing that it's printed at 38.5. If we remove all these trend lines, we can just see that we have a 23% retracement down here, roughly 37,000. We've just poked through the 38% retracement, which is going to be the dotted line right here. And that's really good because the next stop after that's going to be our 50% retracement, which happens to correspond with roughly that 50 weekly moving average. So everything tells me that if this is real, then we're going to get above that 50%, get up here to 61 at 50K. And then the reason why this is so important is because the least resistance in terms of the Fibonacci retracements is going to be when we actually breach that 50 to go all the way back up for a full retrace, which is going to be over here at 65K. So what does it mean? If you're unsure where this thing's going to go and you don't like buying things that are already up 8, 9, 10%, wait for it to settle. If it's going to blow through this 50 weekly, you can buy it above it. You can wait for it to test and then back test and buy the breakout. Because if we have a look here at gold, by comparison, gold is forming a massive long-term pattern here. Here we can note that just by contrast, again, generally speaking, a stock or a security, meaning like even gold, is going to hit a level once, hit it twice, and then on the third try, it'll finally break. So here we can note that we have a multi-decade pattern forming here, a massive cup and handle, and now inside of here we got that same W. And just look and see how it actually formed. So similar to Bitcoin, we have our W formed inside of here, boom, 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 and double topped up here. So again, all-time high on gold is 2075, and we hit 2070.64, right? Roughly 1% off of the all-time high. And now we're backing off. So we're backing off to test those other highs, roughly at about 2000. That corresponds with the same areas that we talked about here on Bitcoin with roughly 42 and roughly 49. So if you're looking for a template on how a breakout can happen, just look at gold. It already did it. And we would note that gold is inversely correlated to what is happening with Bitcoin. So if gold continues to slide, that is likely going to be supportive for the Bitcoin. Just quickly looking at Ethereum as well, I would just note that Ethereum is battling for its primary long-term downtrend. And right now, BTC is at about 42,500. And we can see here that Ethereum is at 27,500, right around those round numbers. Switching gears here to ES, we finally got the bounce. Right? When was it going to happen? Well, I don't know. Again, I'm usually early. So I was early on calling it. And look at that big fat green dildo. For me, a big green dildo is not what your mom uses. It is actually a candlestick pattern where we can see that because we're inside the range of yesterday's bar. What we're going to do at the open, I don't know. But this is a dramatic pump, right? My mom would be impressed by this pump. So all I want to look for here is going to be continuation. In terms of continuation, what I want to see is not only the high being tested, but I want to see it blown out. I want to see it go all the way up here to roughly 4,300 or 430 SPY, and then see what happens. Otherwise, at the open on SPY, if we are to set right, if we are going to open right here, there will not be a gap on the chart, but no one's had a chance to buy or sell at this area, which means that I would suspect they're going to try to scrape. And what I mean by scrape is they're probably going to move it down somewhere where I would suspect we would find very strong support would be at the relative low from February 23rd at about 421.35. I'm also watching the low from, I believe it's Tuesday at 419. But the most important one is going to be this one right here at 420.76. Why? That's where the volume came in. That's where our capitulation bottom came in. And that's at 420.76. So if we pop over to here and have a look at SPY on the weekly chart, we can note that, again, chart looks pretty bad. It looked just like Bitcoin did before it snapped back. So what I'm noting here is just that, again, the pattern is very obvious. We're still below the 50 EMA, but we're finding some relief here. Let me make sure my camera's actually focused in. I want to take a minute here to just explain what's happening. So we are seeing a ceasefire in Europe, right? Hoping this goes well. And Russia's not been respecting the ceasefires for a while. So it was supposed to have started at 7 p.m., I believe, last night, going through all the way to today while people can evacuate. That's called a relief. It's called relief. This is a relief rally. It's called a massive dead cat bounce. I'm hoping and praying that this is going to hold and that the people in Europe can find some level of stability. And what I would note is that if you're planning on holding overnight, I don't know if I have it handy. The thing that we wanted to talk about was, I'll just talk about it. I don't need to have the picture. We have CPI coming out pre-market tomorrow at 8:30. So if you're buying SPY, if you're buying Apple, if you're buying Tesla, you have to hold on all the way through that if you hold on overnight. But CPI print is going to be very important. And in addition to that, we also have Christine Lagarde, who is the ECB head, speaking tomorrow morning, pre-market at 8:30. And we also have the EU Leader Summit. So I believe that Putin is attempting to give some good faith. Again, what is a dictator going to do for good faith? But he's trying to get some goodwill so that when they have that EU Leader Summit, they're maybe not going to be as aggressive on them. Everyone's been pulling out. Everybody, right? Coca-Cola, Pepsi, Visa, MasterCard, Starbucks. Russia's turning into North Korea. And I don't think the citizens are particularly impressed. So looking back at the charts here to try to wrap this up, what we have to also keep in mind is that, can we believe this pump? Again, the rule of thumb is that stock markets bottom on peak fear. We're sitting here at 13. We're sitting here at 13, and we've been in fear for quite some time. Look at a year ago, neutral. Then we went down to fear a month ago. We've been in extreme fear for a week, and then yesterday, and then today. So I believe that they are going to attempt to pump this thing up to give people the chance to buy the high, dump it down, and make it go all around. What I mean by that is when we look and see what happened in the price action yesterday, there were 9 times we went green to red and red to green. That is a lot. These moves were just so dramatic, right? All the way down, all the way up, all the way back down, all the way back up. And what I noted yesterday in our Slack group, and again, if you're interested in that, click on the link in the description, is that I think a lot of people were feeling the desire to sell the first rip. Especially after we saw, again, this massive rip that happened suddenly, fill the gap at 427, and then right back down. What I would encourage you to do is to be mindful of the risk today. If you were very fearful yesterday and now feeling very greedy today, you are going to be at risk of making a critical error. Why? This is the bread and butter of the market makers. Create the fear, sell the fear, buy the top. So what's really important as well as we wrap up here is that what is driving the move overnight is not particularly what's happening in America. We have to see the Americans come in and buy heavy and aggressive to confirm the move. What's actually driving this is a 6% move on the DAX, gap and go. So if the US is going to move, what we have to keep in mind is just what it's going to do with that gap area. Here, the DAX gapped and go'd. However, the reason why DAX is moving up dramatically more is because Scholz, who's the chancellor in Germany, said that we are not going to do a Russian ban on oil. We need it. America said, yeah, we're doing it solo, along with Canada, but who cares? So this is called relief, and it went hard. So the reason why I'm pointing this out is because the people who trade overnight or who trade the E-mini futures have already had a chance to ride along the 6% move on the DAX. And I would also note that we've price discovered a very high today. So the key areas I was looking at are 42.50, and we blew through that, which means that if they want to advance the charts during the cash market, it opens up at 9:30. They've already price discovered the E-mini futures above those areas, which means they know how much resistance there is, and it'll be that much easier for them to blow through it again today. There were dramatic calls being bought, though, and we don't know who is truly in control. This chart needs a lot of work to get saved. And just last thing I'll point out here, I know it bounced around a lot, is just look at the weekly performance. So as we have a look here, again, the ES is currently down by about 1.8% on the week. And of our total move from last week's close, we were down by about 4, which means we've retraced roughly half the move. The DAX is up by 6 because it just puked a lot more. So if you look here and see what it did, again, it's let's just count from yesterday, from last week. So from last week's close, it went down by roughly 12. So now it's up by, again, roughly 6. So it retraced roughly half the move from last week. So I would say that we're roughly on par for both of these exchanges. And really, it's going to be about all the key areas today. With that said, I wish you all the best of luck. And I'm wishing the bulls the best of luck today to get some resistance blown through. Thank you for watching, and we will see you tomorrow.